Time to take a look at your money here on Good Morning Quad Cities. But first, let's get a weekly stock market recap. The S&P 500 is up almost 1%. The NASDAQ up just under 1.5%. And the Dow Jones Industrial Average is up almost 1%. And the American economy grew at an annualized rate of 1.1% in the first quarter of this year. That was actually lower than expected, giving more clarity on if the U.S. will see a recession this year. And joining us now is financial advisor Mark Grywacheski from beautiful Mexico. Good morning, Mark.
Hey, good morning to you, David. Great to see you again.
You know, I'm curious, what stands out to you the most on this latest report?
Well, the big elephant in the room, so to speak, David, is the steady downward trend in economic growth over the past few quarters. The economy is certainly weakening without question. And the fact that, as you pointed out, that 1.1% growth rate in the first quarter was significantly below the 2% rate that Wall Street was expecting. And all of this, I think, gives further support to that consensus expectation that the economy will likely dip into recession sometime this year. Now, if you remember, back in the first and second quarters of last year, the economy entered, what we called a technical recession, which is defined as 2 consecutive quarters of negative economic growth. In other words, the economy actually contracted. But the second takeaway, David, I think from this data is that I think a lot of people were quite surprised that one of the stronger areas within the economy in the first quarter was consumer spending. And that's critical because consumer spending historically drives about 2/3 of our nation's total economic growth. In the first quarter, consumer spending increased at an annualized rate of 3.7%, the largest quarterly gain in nearly 2 years. But how much longer, David, can the American consumer hold up in the face of this steady barrage of high inflation and rising interest rates? And that's the main question, I think, that Wall Street is really trying to piece together.
Yeah, and I know that you've been watching all this data very closely. So what do you think this latest economic report is indicating about that potential recession?
In my opinion, David, I wouldn't read too much into this as far as trying to predict, will we get a mild recession? Will we get a little bit more of a severe recession? There's just way too many variables and unknowns over the next 9 months to give any accurate measure of just exactly the type of recession we might get. Look, anytime you start talking about the economy, David, that conversation inevitably turns to consumer spending. Again, it is the main driver of the U.S. economy. In my opinion, David, I think one of the key variables we need to keep an eye on for just how strong consumer spending remains and then ultimately how any recession, might play out will be heavily dependent on the U.S. labor market. Right now, David, the labor market is still quite strong. And if that labor market, David, remains fairly strong over the next 9 months,
all right,
that means that there are more people employed, and that means there are more people receiving a paycheck, and that means there are more people spending that disposable income, which ultimately keeps the economy going and could potentially minimize the fallout of any potential recession.
Right. And so let's say we do hit a recession. What areas of the economy do you think may be hardest hit, and what areas do you think may fare the best?
Yeah, well, look, for the past 12 months, David, we've seen a steady decline in manufacturing, while at the same time, we've seen this steady rise in strength in the service industries. And, think of bars and pubs and restaurants, movie theaters, the travel industry. And I think both of those trends, whether it's manufacturing, whether the service industry, will continue for the rest of the year. And here's why. Back in 2020, David, and really into the first half of 2021, all of those government lockdowns and quarantines forced a massive shift in spending away from services and into the purchase of physical goods. And here's what happened. We were basically stuck at home and bought a lot of physical goods to occupy our time because we couldn't go to those bars and restaurants and movie theaters. But as the economy started to reopen, we continue to see this return shift. And in consumer spending and resources and labor out of manufacturing and physical goods and back into services. And again, David, I think that's a trend that will continue for the rest of 2023.
And we know that you're going to be tracking it very closely, Mark. Thank you so much, and we'll see you again next Monday.
All right. Great to see you again. Enjoy the rest of your week. Take care.
You too. Thank you.